Well, we enjoy talking with you about the markets here on RFD TV and Rural Radio. I'm Marlon Bowling, your tour guide to the ag commodities. I want to welcome to the show Brian Hoops. He happens to be the president of Midwest Market Solutions, and he is based in Springfield, Missouri. Brian, thank you for joining us here on the show. We had the crop progress numbers that came out from USDA yesterday after the markets closed. Did anything really catch your attention there?
Yeah, good morning, Marlon. The big numbers, I think, with the surprise to the trade was the improvement of corn conditions up a couple of percent. That weighed on corn overnight in the trade until we had that private export sale announced. But that was a little surprise to the trade. The maturity of the corn and soybeans is not a surprise, but we remain well behind the normal pace as far as maturity. 29% of the corn crop rated mature. That's about 30% behind where we normally should be. Soybeans, very similar situation. 34% of the crop is dropping leaves. That means 2/3 of the crop is still vulnerable to an early frost if there would happen to be one that would occur. And that's 25% below normal. But spring wheat harvest is being hampered, and we can see that being reflected in the Minneapolis wheat futures as they try and rally to offset some of this delayed harvest and the onset of some quality and yield issues in the spring wheat belt.
All right, so yes, many areas of the Corn Belt are really lagging behind in maturity, and the northern tier states are very worrisome because they are talking cold weather here in the next maybe week to 10 days or so. Don't know if the market is really building much of that into the corn trade just yet because the corn is a little bit lower yet.
Yeah, exactly. We're not really too concerned, I don't think, as far as a market goes, being concerned about cool temperatures, being concerned about even some snow maybe that would fall and hamper this harvest activity. And there's been some forecasts that are suggesting that we could have something like that in mid-October. So hopefully we don't have that happen. We'll need an extended growing period. But certainly there's not much of a market reaction to anything here as far as trying to add in a lot of weather premium.
North Dakota corn maturity is only at 5% and Minnesota at 8% right now. Let's take a look at the prices on the corn market right now on December. We'll go with that nearby December contract here. It is trading just 3/4 lower at 372.5 per bushel. And if you look at our soybean trade at the moment, we have that November contract. Let's roll over to soybeans there if we could. On November, we are trading a little bit higher, a penny and a quarter higher at 893 3/4. And on the wheat market in Chicago, first of all, we have that December contract, now 4 1/4 lower. Pressure continuing there. We're at 478 3/4. We're about a penny and a quarter off of our low of the day. In Kansas City, wheat so far today, that December contract is down a penny and 3/4 at 404 3/4. December Minneapolis wheat is about 7 higher. It's been surging ahead here recently and up in there in the mid 550 level at times today, or 540 level rather. Let's take a break right here, and Brian will come back and take a look at our livestock market activity as we get into our mid-session on a Tuesday. We're talking to Brian Hoops right now, and we'll be right back. Let's check out our livestock trade, and we'll begin with the live cattle board, get into our feeders and the lean hogs too. Then we'll invite back Brian Hoops. Right now on live cattle in Chicago, we have the October contract down 13 cents. The December, early in the day, we set a high on December of 108.47, and right now we're at 107.13. Well, if you do the math, that means we're about $1.34 off of our earlier high this morning. We are currently down 63 cents from our close yesterday, and I'll remind you, on the close yesterday, we had a late day rally, and quite a few contracts were over $2 to the upside. In fact, I believe it may have been December, was up something like 260 or something like that. We had the February down 42 cents right now at 113.67. And that one is about 92 cents off of its earlier high of the day. Now let's take a look here at our feeder cattle market. Right now on the feeders, you have October down 47 at 140.78. And that is slightly over $1 off our earlier high. November down 35 at 139.38. And if we go to the lean hog market, lean hogs, well, they had December with some big gains yesterday, over $2 higher, and today they're more moderate, only 75 higher at 69.13. But it's been a wild ride, though. They got as low as 68.55 there for a little bit. So, Brian, your thoughts here on this livestock trade we're seeing. First of all, why did they run away in the cattle market late in the day yesterday, and then today just no follow through?
Yeah, had an explosive day yesterday. Gap higher on the opening from the cattle on feed report. It kind of built into some more gains throughout the trading session. Funds were covering short positions in that market, and then you had the show list numbers that came out around midday, showing the show lists are going to be down around 21,000 head from last week. And after a couple dollar higher cash trade a week ago, trade is thinking we will see more gains in the cash market again this week. We did make new highs early this morning and have set back. The October contract is pretty much in par with last week's cash trade already, and I think it's kind of taken a breather here. Maybe a little profit taking, if you want to call it that, after some big gains yesterday, but taking a breather, waiting to see where we start to see bids and asking prices develop in this market.
It has that appearance that the trade doesn't seem totally convinced that we're going to see a big Chinese pork purchase this week, where it's coming off the highs like it is.
Yeah, he had a pretty good run in the hogs yesterday. Another run higher again this morning. News about the African swine fever hitting parts of South Korea has the trade thinking that we may get some more export business. Of course, everyone's always worried, and we should be, if it moves into North Korea. Our demand base will continue to erode if that's the case. They will not need to be buying as much corn or soybean meal if we have to eradicate a lot of pork, similar to what we saw last year in China. So we certainly don't want it to spread, but it would be beneficial for our hog prices, at least on the short term.
We'll see. Thank you, Brian. I appreciate it. Brian Hoops. He's with the Midwest Market Solutions in Springfield, Missouri. That's the very latest from the trading floor.
All right. Thank you, Marlon. Appreciate that.